What's up, guys? This is Gil here. Welcome back to another update on my portfolio. This week was awesome for everybody, actually. Pretty much anybody that had a long-term portfolio, S&P 500, it didn't matter. You were making money. In the week, I'm up 1.3%. This is actually my fourth week total since I started this. I'm up for this whole week $23.73. $2.13 of that is earned dividends. Overall, since October 16th, 2019, I am up 22.88, and almost 2%, 1.95% overall. Let's take a look at each sections of the pie. So my real estate is down 30 cents. That's 0.08%. Finance pie is up 74 cents for the week. Yep, for the week. So it's 0.27%. My healthcare pie is doing great. 5.96. $5.94, up 2.32%. My utilities pie is up $5.73, up 3.2%. Tech has up 50 cents, 0.34%. My gold GLD holdings is $1.11, and so it's up 70.76%. Consumer pie is going to be up $3.99, about 2.77%. Not about, that's exact. And my energy pie is up $4.63. That's 3.69% for the week. Telecom is up 26 cents, 0.28%. Industrial is $1.13, $1.24%, or not $1.24, 1.24%. Sorry about that. Overall, you can tell I'm up 1.95, like I said before, up $22.88. 324 of that is dividends. The rest is market gains. So that's the update for the portfolio. This week was kind of crazy. It started out slow Monday, Tuesday, Wednesday. I didn't do so hot, but Thursday, Friday, this thing just skyrocketed. But everything did well. So I want to see how it does overall. This is literally a month in. I started this, like I said, October 16th. So we're just over a month. I have over $2,000 in there. I just can't wait. If I can do this in a month, I can't. If it wasn't, for this channel, I wouldn't have thought I could have saved this much. So I'm excited. Let's go up to what I want to talk about next. All right, guys. The next thing I want to talk about is this article I read here in CNBC. It's pretty much going over how returns are more than likely going to be lower in the years ahead. And it talks about different strategies you can use to, get a better investment than like the S&P or, pretty much the market itself, right? So I wanted to talk about this because this is, it's everywhere, right? The negativity about, the market's crashing. It has to become a bear market. With all the corporate debt, all the corporate buybacks dying down, there's not going to be rallies like there used to. Now, don't get me wrong, this last 4 weeks has been crazy good. But it makes good points, right? Like, let's say a new administration comes in, right? Because that's one of the things they talk about. It's more than likely going to be less investor friendly than the current administration. So it's just something to safeguard your portfolio. It goes over the strategies, and one of them is dividend investing. So like mine, I do dividend just because I love how the compounding interest, from the dividends itself can grow and grow and grow. It's also, I've read many articles how it's, even in this article, it says that most dividend investors are following the market. Return wise, right? So they've see right here, dividend players have performed well, about in line with the market. So now mine, of course, is a little bit more aggressive. The only safe thing is probably my gold, right? So I mean, over time, I might start going into a little bit safer things. We'll see. I'm 30 years old. I have a long time. I have 35 years at least before I do anything with my account. So we'll see from there. But I don't know. It's a good thing. It's a good article to read. Because we don't know what's going to happen, right? We don't know if it's going to stay. It could be a bull market for the next 5 years, right? It's been for 10. Nobody expected that. And every year someone was saying that it was going to turn into a bear market. But yeah, it's going to be an interesting way. Let's see if the U.S. and China keep up this tariff war, or if they make a trade deal. If they make a trade deal, we really don't know. It's going to be the opposite. I think that'll drive the market even higher than what it is now. So we'll see. Ray Dalio has another great article. If you guys haven't seen it, it's been everywhere on LinkedIn, where it talks about how we're going to have a lot of tough stages in our economy in the near future. And it's going to be a deflation. It's not going to be a crash, but a deflation of returns getting smaller and smaller, things like that. So I think with our dividend portfolios and posting them up and seeing what strategies work the best gives us a better shot. So, yeah. All right, guys. The final thing I wanted to talk about is Ford stock. I've been trying to decide if I should fit it into my portfolio or not. It is super cheap, $8.95. It is higher than the 52-week low, but it has a 6.7% dividend yield. So it's just it's enticing. Now the only problem is that this thing has just been going down instead of up. It's like the opposite of what other stocks have been doing, especially the last year. Even this week, right? It hasn't done so well compared to everything else. Look at that. It stayed pretty much neutral with this run that we just had. It does hold a lot of debt, but is it a steal at this price? Do I take the chance to see if it'll go up? I just don't know. So I don't know. I wanted to hear you guys' opinion. So let me know in the comments down below, guys. Just to start a conversation. And if you do like my content, subscribe, guys, and hit the like button. It does help me out. So yeah, guys, I'll see you guys next week with an updated portfolio, hopefully with some more money, invested in there. Thank you so much, guys, for the people that have commented. It's super fun to talk about, something that I like and that I'm learning with other people. It's nice. And see you guys next week.